Good morning. Welcome to the Insurance Subcommittee on Life and Health meeting. We're going to open with a word of prayer. Representative Matiak, if you will give us a blessing.
Thank you, Madam Chair. Heavenly Father, we just ask you to bless this day, help us to do the people's work, help us to be calm and wise, and help us to be kind to each other. In Jesus' name, amen.
Thank you. We have several bills to go over today, and we're going to try to move along. I know that there are several other meetings going on at the same time, and we'd like to go ahead and get started. I do have several that want to speak to the bill. We'll start with, very quickly, House Bill 184. If you would.
Thank you, Madam Chairwoman and Subcommittee. I am here to present House Bill 184, LC 520225. This bipartisan bill seeks to build off the landmark HB 1013 we passed last year on behavioral health treatment. That bill, in part, as we know, helped guarantee that health insurers were providing coverage for behavioral treatment to the same extent they're providing coverage for traditionally physical health treatment. What this bill covers is the need to guarantee that insurers are also properly covering treatment, physical or otherwise, necessitated because of a mental or behavioral health condition. I think the most common example is when an insurer denies or attempts to deny coverage of treatment of a person with a mental health condition who has self-harmed or attempted suicide. That's a specific example that came to me from my county, an insurer who denied coverage of emergency room services and part of hospitalization for her preteen daughter who had depression and anxiety after she ended up self-harming. Of course, insurers are typically allowed to impose so-called source of injury exclusions, excluding coverage for injuries from, say, bungee jumping. But under federal law established long ago, insurers are already prohibited from denying coverage for treatment necessitated by a mental or behavioral health condition if the insurance would otherwise cover treatment. That law, though, is not the Mental Health Parity and Addiction Equity Act we passed, or that was the basis for HB 1013. It's actually HIPAA and the regulations promulgated thereunder, which is what is cited in this bill. So despite these long existing prohibitions, based on even just the one example, these kinds of denials of coverage happen all the time. I have in my hand an article from NPR that states that despite law, health plans refuse medical claims related to suicide. So much of the confusion, again, is likely because source of injury exclusions can be validly and explicitly written into a policy. It's just that you can't deny coverage if there's a behavioral health condition causing that. So what does this bill do? Very quickly, first of all, like HB 1013, it's to import those federal provisions into the state law requirements. As OCI has already communicated to me, this is technically not much of a change because, again, that prohibition already exists, just like the Mental Health Parity Act. The second thing is to ensure that OCI formally tracks this issue contemporaneous with the tracking of the implementation of the Mental Health Parity Act. It's my hope that that increased tracking will ensure that insurers will ultimately comply with this law that is critical, particularly in light of increased behavioral health issues, particularly among our youth. I will stop there, and I'm happy to answer any questions.
I don't see any questions, and we appreciate your bringing this today because it is an issue. It is in regulation already, and the Commissioner's Office is working on it, and this was a hearing only.
Yes.
So thank you very much for bringing that to our attention today.
Thank you for allowing me to do so.
Thank you. The next on the agenda is Chairman Hawkins, HB 295.
Thank you, Madam Chairman. I'm going to be brief, so Greg Conley, the attorney for the Department of Insurance, can speak to some of this. He's got another bill to go speak to. This is a cleanup bill on HB 888, the surprise billing, which we did about 2 years ago. That bill has been working fairly smoothly until you get to the arbitration portion of the bill, and there's been some issue with that. Also, the timeline, we had 30 days in that bill, and it's tough for all three parties to be able to hit that 30 days, so we're extending that in 60 days, as you see in different parts of the bill. Section 1 speaks to the failure to comply. for the, any insurer. And, well, I tell you what, I'll do that later. Let me go ahead and let him go ahead and speak to the bill. Is that okay?
Yes, go right ahead.
Okay.
Good morning, Madam Chairwoman. Greg Conley from the Department of Insurance. This bill, I think, is a pretty good compromise reached between ourselves, the doctors, hospitals, insurers, over just some improvements to the original Surprise Billing Act. And really what this does is each one of the changes to the bill targets sort of issues we saw that came up in the arbitration process after kind of that was implemented. And so some of that has to do with timing. We gave arbiters 30 days to decide cases. When a large volume of cases is sent to arbitration, that causes a backup and makes it so that the arbiters aren't able to complete arbitrations in that time. And so all parties agreed a 60-day period for arbitrations was a little more fair, gives them a little more time to make decisions. Additionally, 60 days to allow claims to be made by doctors after receiving their final payment. Right now we sort of have a lot of doctors who are submitting claims maybe a little longer than that. And so we kind of wanted to come to an agreement on what's a proper amount of time, and then after that period of time, sort of you've run out of time. There's also a provision in there about allowing or asking insurers to inform doctors that a final payment has been made. And it gives the department flexibility to sort of craft what that's going to look like, because different types of providers, different type of entities are going to receive different types of final bills, hospitals versus family practices. And so really what that means is it's not a final payment for purposes of, say, should something like this move to litigation, but it's final payment so the doctor's on notice. You have 60 days to now submit your claim. That's really the point of that final payment notice. And then finally, it's identification of whether it's an ERISA plan or not. And the issue that's happened here is that, as you know, there's a federal arbitration process. There's a state arbitration process, and we actually administer part of the federal process. And what's started to happen is providers are getting bills and they're not sure whether it's an ERISA plan or not ERISA plan, and so often they submit them to the incorrect process. And so this provision, it doesn't actually require a notice on the bill itself. So for instance, some insurers, just based on the plan code on the bill you send a provider, they can tell you, oh, if it starts with these three numbers, it's an ERISA plan. If it starts with these three numbers, it's a non-ERISA plan. And so really what this does is it just makes sure that the insurers inform the providers how to tell the difference between an ERISA plan and a non-ERISA plan. So I know there's some concerns about this impacting ERISA billing. This should not actually impact the billing. This should just let the providers know whether they're receiving an ERISA bill or a non-ERISA bill. But it doesn't necessarily have to take place on the billing statement. With that, I would answer any questions you may have.
Okay, actually, I was the one that had some questions. I was contacted by the Self-Insurance Institute of America with concerns about the bill because they feel as if it is preempted by ERISA. Just the idea of identifying it as an ERISA plan, the mandate, would there be a penalty if they don't do it? Things like that. And in the bill, let's see, page 17, where it starts talking about provider failure to directly pay within 15 working days. ERISA actually has it as 30 days is the federal law for ERISA plans.
Yes, that's correct.
And it looked like it ran together is what they didn't like that either.
And I think, I'm not familiar with Mr. Work or the Self-Insurance Institute. I've heard of them, but we've never worked together. The bill itself, the original law, actually exempts ERISA plans. And so these payment parameters do not apply to ERISA plans at all. And so I think that perhaps he is misunderstanding when you see these payment parameters. It's not demanding that an ERISA plan. It's demanding that plans that are subject to this law, which is non-ERISA plans by definition, are within those payment parameters. So this is not going to change payment provisions on ERISA plans at all. Okay,
so this just means that a carrier, i.e. Blue Cross, would have to put on theirs, we are a non-ERISA plan. An ERISA plan would not have to do anything.
Yeah, and I mean, you could do it, like for instance, if we're using Blue Cross as an example, they could do it any number of ways. For instance, they could say, if you get a bill with this number on it, like I said, that's an ERISA plan. And if you don't get that number, it's not an ERISA plan. As long as the doctor has some way of differentiating, that's all this law is seeking to do. So they know which proper arbitration process to pursue.
Okay, what about Aetna, how is Aetna gonna do it? Will they do the same thing, or each carrier have their own method of identifying it?
Yeah, each carrier, they all have their own internal processes, which are significantly different. And so that gives them each the flexibility to sort of decide how they're going to inform providers the difference between their plans. So there's no prescribed way they all have to do it. They're all allowed to work within their own processes.
Does anyone else have any questions?
You know, let me just add, in our original legislation from a few years ago, there's a section in here, goes back to Code 33-20E, -3. Nothing in this chapter shall be applicable to healthcare plans which are subject to the Employee Retirement Income Security Act of 1974. So nothing in the bill applies to ERISA. That's in the original legislation. So when we go into these sections and are changing some of the dates, or, you know, the 15 to 30 day, that's prompt pay, and it refers to the Code of Georgia. Has nothing to do with ERISA. ERISA's exempt from the beginning of 888.
Okay, I've spoken with the chairman, and it may be better if we hear this only and get a little more follow-up. We have talked to legislative counsel, and there's differing opinions on how this should go. So at this time, we'll just do this as a hearing. We will have another meeting so we can get this clarified. It came up very quickly. So, all right, I appreciate it.
Thank you.
Thank you.
Thank you.
Next will be Chairman Mathiak. You have a bill?
Join her.
Please do.
Good morning, colleagues. Okay, my bill, House Bill 362, LC 520244 is my LC number. And what we have on line 15, all we've added is health care expenses, kind of clean that up, that language. And then on line 21, it's a definition of treating healthcare provider, that the provider, of course, has to be legally licensed. And then the biggie for this bill, on line 94, it talks about the benefit provider, upon written request from the healthcare provider, shall provide within 30 days such request, or treating healthcare provider written account of any payment and reimbursement for the provider's healthcare services. I understand that we get EOBs, but sometimes other means of payment, the doctors don't know what's been paid or who's been paid. So this provides for the doctors to be able to submit questions of who was paid and how much was paid. We'll take questions. You guys are looking at me like, what are you doing?
We're going to probably have just hearing onlys today. There were a couple of questions. Let me see if anybody here has questions on the bill. You look like you want to ask a question. Okay. Let's see. I think we had, legislative counsel had a couple of questions. Did you want to address any issues on this particular bill? It was 362? Okay. All right. We're going to just have hearings only today on all these bills.
Okay.
So I appreciate your bringing this forward, and we will have another meeting.
Okay.
Thank you. House Bill 378, Representative Hutchinson. She's not here yet. Okay, we'll. Oh, okay, there you are. Okay. Please introduce your bill.
Yes, I will. I brought some information. I'm not sure if it's even needed. I am presenting House Bill 378, LC number 520211. This bill, usually when I hear this is a simple bill, I automatically think there's something fishy going on. But this is truly a simple bill. Our diagnostic manual, as a clinician, I have been in private practice for over 20 years. The diagnostic manual has to be really specifically when it comes to autism. There's been a lot of changes in the diagnosis of autism between 1980, when we were referring to the DSM-3 in code. Now we are referring to just a generic. This is the recent the most recent version of the DSM. This specifies which version, and that the commissioner has the authority to update it, because DSM-5 is now, I'm sure DSM-6 is going to be introduced in the next 5 years or so. So this takes out all the ambiguity. At this point, there is no more. All of autism is under one spectrum. It used to be different diagnoses. They used to have Asperger's disorder. They used to have, I'm sorry, it's 8 o'clock in the morning. They used to have pervasive developmental disorder. That is all under the autism spectrum now. So this bill would just clear things up and give the commissioner the authority to make a DSM-6 when it comes, or not if we're not in agreement with it. But we have to make sure that that the DSM is specifically outlined, because we need the ICD-10 codes in it, and that's really just what the bill does. And I have information on what the DSM is, if anyone needs that information.
Do they update this book every year?
Not every year, but it's been, we're on DSM-5, and that's been since the 50s is when we started with DSM. So probably every 10, 15 years.
Okay, thank you. You do have a couple of questions. Let's see. Representative Gamble?
Thank you, Representative, for your bill. And my question is just simple. Does the Department of Insurance Commissioner, are they good with this?
Yes, I
Okay.
think they're requesting it, so that
Okay.
they have more control over which version of the DSM that we refer to.
Chairman Levinson?
Is this the same bill you had last year?
No, so I had it 2 years ago.
2 years
and
ago,
then, most of it was in 1013, but the autism part wasn't as clear as we would have wanted it. But it's very, very close, yes.
All right, thank you.
Chairman Mathiak?
DSM is specific to psychiatric disability or diagnoses, correct?
Not just psychiatric, psychological as well. Some things don't fall in both,
Right.
because not everything has to be medicated. So psychiatric, psychological,
Great.
both.
Thank you.
Thank you very much for bringing your bill. Again, we're hearing only today. Thank you.
Thank you.
Okay, let's see. Is Senator Ben Watson here? Or Senator Brass? No, ma'am. Okay. We are expecting them momentarily. We'll take a pause for a moment and see if they're here. We'll contact them. Thank you. All right, we do have one more bill to hear, and that would be Representative Henderson, House Bill 384, if you will come forward.
Good morning, Chairman Lumsden and the Insurance Committee. Thank you for allowing me to present this bill to you this morning. I'm actually building on a bill that I carried last year for breast cancer awareness. I will call your attention to LC 339366, line 16. Prostate cancer is the second leading cause of death among men. During 2023, 1 out of 6 men, or 9,357 men, will be diagnosed in the state of Georgia alone. 937 will lose their battle to prostate cancer. Prostate cancer early on has no symptoms and it has no pain. If you wait for pain to be tested, then it's too late and it's progressed into advanced stages. PSA is a simple blood test. A PSA level of 4 or lower is normal. Above 4 requires further testing among men. This bill, HB 384, recommends that insurance companies send notifications to men about being tested at age 45, age 40 if there's a family history. As a cancer survivor myself of breast cancer, I can attest to the importance of early detection and having the appropriate treatment plan. We all have fathers, husbands, sons, uncles, and as a result of this legislation, we're hoping to save many, many lives. Why is this bill necessary? Well, it helps men see sunshine and live a cancer-free life. My mission is to raise awareness for early detection because early detection is key. Early detection saves lives. Early detection saves my life. And this is a bill, my bill, that was previously helping women last year that Governor Kemp signed into law. I'm just adding on to that same bill for men with prostate cancer to get treatment early, detection. Thank you.
Thank you. You do have a question,
Yes, ma'am.
Representative Gamble?
Thank you. Representative Henderson, I appreciate you bringing this bill, and I remember your bill last year. It was a good bill, and happy to see that pass.
Thank you.
I do have a question, and this is just more technical, but you said a minute ago that it would recommend to the insurers, but this says that they shall provide the notification, so they would have to provide the notification.
Right. The bill, it would be mandated for insurance companies
Okay.
to send the notifications to all men upon reaching age 45.
And then I remember last year some discussion in your bill about those notifications, whether they were by mail or they could be electronic. And so with this definition of or basically lack of, I guess the insurance company would have the ability to determine what that notification would look like.
Right. Some, like Blue Cross and Aetna, Cigna, they prefer electronic, which is more feasible,
Mhm.
but others prefer mail as well.
Okay.
So either way, the notification would be sent out.
Thank you.
Thank you for that
And
question.
I've got to go get one of these tests at some point in my near future, so I appreciate this.
Thank you. Yes. Yes, sir.
I don't see any other questions, and I appreciate your bringing this bill forward. Again, we're just hearing only. Thank you.
Thank you.
We will give the senators a few more moments, so we'll be at ease.
Do we sit here or there? Here or there?
Wherever you'd like to go. Thank you, Senator. If you would, please, you're bringing us Senate Bill 65, and I believe our folks had a handout. Thank you. It's all yours.
Thank you, Madam Chair. Appreciate y'all hearing us this morning. This is Greg Conley from the legal counsel from the Insurance Commissioner's Office, who knows more about this state-based exchange than just about anybody under the Gold Dome. So if we have any questions, I may defer to him, but let me just sort of discuss this in general. This is the final evolution of the ACA waiver. So there are two waivers under the ACA. One's 1115 and one is 1332. The 1332 portion is already ongoing and has reduced insurance premiums throughout the state of Georgia, and this helps bring this to fruition and finality. Basically, ACA encouraged states to set up their own exchange, and these are the 17 states, including the District of Columbia, that have their own state-based exchange. In alphabetical order, California, Colorado, Connecticut, Idaho, Kentucky, Maine, Maryland, Massachusetts, Minnesota, Nevada, as they pronounce it, New Jersey, New Mexico, New York, Pennsylvania, Rhode Island, Vermont, and Washington. So as you can see, this was something that was encouraged from the very beginning, and this is something that Georgia is embracing. This will allow us to go from a national, federally based exchange and bring it down to the state. Now, just as a little bit of a refresher, this is for folks from 100%, that will cover the gap from 100% up to 137%, but this will really go from 100% of federal poverty level up to 400% of the federal poverty level, right? So this is what has been shown in the state of Georgia to reduce insurance premiums and also to increase access. Because what we're talking about is counties that have been somewhat deserts relating to people that have that offer insurance. So we've gone from some counties only having one to counties up to sometimes 4 to 6 that have improved competition and driven down price and has increased access. So that's basically it in a nutshell. The 2.75% that the federally based exchange charges will be used for running the state-based exchange, and that will fully cover it. Now, as you may recall, what was termed Obamacare, when there was a federally based exchange, that was a, to put it nicely, was a little bit of a catastrophe. Beginning that, remember, it was a little bit rushed, and they didn't have the infrastructure needed, and they called in, I think if I remember correctly, Microsoft or Amazon or somebody like that to help them out with that. They did get it up and running, and it is running efficiently now. We have been practicing, I say we, this gentleman here and the Commissioner of Insurance have been practicing and been working on this for the past 6 months, and it is ready to go. So that's basically it. If you look at Senate Bill 65, you'll notice that it is just 3 pages, and that's including all laws and parts of laws in conflict with this act are repealed. But basically, this takes out the allowing the state of Georgia to do a state-based exchange, and that's where we are. The Commissioner of Insurance will do that, and I'll be happy to answer questions, and I'm sure that Mr. Conley could probably augment what I said so that we can probably better understand it than the way I presented it.
Thank you. You do have a question? Okay. Chairman Hawkins, do you have a question?
Well, no, just a comment. Thank you for bringing this bill. It's been a long time coming. Very clear, very clean. You did a great presentation. And when is the right time? Are you taking a vote on this, Mr. Chairman?
No, hearing
it's a
only.
hearing only? Okay. Well, congratulations. Thank you.
Thank you.
Yes, go right ahead.
Thank you, Madam Chair. I have one question. I was contacted and given information that when we switch from a federal FFM, that's a federally facilitated market, to a state-based market, that we often have a decrease in the number of people who have coverage. But you were saying that just the opposite pretty much. Is there a decrease in the number of people who are covered when you switch from one to the other?
Thank you, ma'am. This is Greg Conley, the Department of Insurance. There have been some states that have seen a decrease, and we're trying to mitigate that. And typically, that's a result of confusion, people not knowing we're moving from one platform to another. There just tends to be some people who fall off. So one of the things you work on with this is a collaborative process with CMS. So we're actually working alongside CMS to make sure that doesn't happen. We have a couple things we're going to do to assist with that. One is, as of right now, if you're enrolled in the federal marketplace, you will be auto re-enrolled in the same plan at the state level. So as long as you remain eligible, you will keep the exact same coverage with the exact same carrier, and you will have to do nothing. So no one who's already got access should drop off. Now, obviously, if you become ineligible for I can't fix that. So we're all going to auto re-enroll. That's one way to make sure that doesn't happen. The second way is that an extremely robust information campaign, a public awareness campaign, to make sure that people understand that we are moving and instructing them on their options if they don't have health coverage and they would like something. And so we're actually anticipating a rise in enrollment due to our ability to micro-target different areas of the state where we know there's a lot of enrollment. We can't obviously control everything, but we're going to do our best to make sure that there's no drop-off in coverage at all.
Okay. A follow-up, please.
Please,
Madam
go right
Chair.
ahead.
Would there be a request for increased funding so that you can do more outreach?
Not right now. As of right now, the way and our budget projections are based on how many people buy plans, so it's always kind of a little fluid. But as Senator Watson mentioned, the 2.75% fee that the federal government charges, that fee will now come to the state for the exclusive purposes of running the exchange, and so those monies can actually be used to pay for a public awareness campaign. And as of right now, we don't project having to ask for any further money from the state to actually support that campaign.
Thank you. We have to speak. I don't see any other questions, but we do have someone that would like to speak. Whitney Griggs, if you would go to the podium. Did you have any questions?
Thank you for the opportunity to speak this morning. My name is Whitney Griggs. I'm the health policy analyst with Georgians for a Healthy Future. Georgians for a Healthy Future has been working on ACA implementation since 2013 when the bill was enacted. We also currently have a navigator on staff who is an enrollment assister that is funded by the federal government right now, since we are a federally facilitated marketplace. And we've had navigators on staff on and off throughout the existence of the ACA. We are very thankful to Senator Watson for bringing this bill and for the interest in ensuring that Georgians have access to affordable quality coverage and an experience shopping for that coverage that really meets the needs of Georgians. One of the really great things about state-based marketplaces is that you can customize the outreach, enrollment, and the advertising to really meet the needs of Georgians. And so we really encourage the legislature, as they're considering this bill and what we want a successful state-based exchange to look like, to really consider investing and funding in a navigator outreach program that meets the needs of Georgians, including funding community programs, meeting them where they are, and you all received a letter from GHF outlining some of the needs that we've identified in this process. Over 850,000 Georgians enrolled in ACA plans last year, which is the largest enrollment number ever, and it represents 8% of the state's population. So the stakes are very high to do this well. So we hope that the committee will take that under consideration and use the savings that we're going to get from no longer paying the user fee and invest that back into a successful marketplace. Thank you.
Thank you very much. Also to speak to the bill is Jesse Wetherington.
Good morning, Madam Chair, members of the committee. Sorry I missed the sign-up sheet. Thanks for letting me come to speak on this measure. I'll be brief. I'm the president of the Georgia Association of Health Plans. My members are fully in support of Senate Bill 65. We think this is a good bill that offers the most expedient, quick pathway for the state to implement an exchange, and it'll put the state kind of back in the driver's seat as contrast to the environment we're dealing with where there's been some uncertainty. So we think this is a good bill, and we appreciate the senator bringing it.
Thank you. I'm sorry, you had a comment or a question? Did you?
I did not, but I'm happy to discuss Ms. Griggs' concerns about navigators if you'd like to hear about it. The navigator program is fully funded, will be fully funded next year, as will the community outreach partner program. And so we anticipate working with Georgians for a Healthy Future and all the other navigators to ensure as many Georgians get insured as can be.
Okay, thank you. Are there any other comments or questions? Thank you. This is a hearing only. We'll get with the chairman. These are all bills that will be heard today, and he will review them. Thank you. Okay, now we have Senator Brass.
I can see you better, Madam Chair. How are you?
I'm good, I think.
You think?
Welcome to, it feels like a Monday. It's a Tuesday, but it feels like a Monday.
Well, the good news, we only got 2 more days this week.
That's right.
So, well, thank you, and if you want me to get started?
Please.
So, SB 27 is pretty simple. We actually passed this bill out of both chambers and got signed by the governor last year, and found there's a little loophole in what we passed, and so we're coming back and tying up that loophole. But the gist of what we're attempting to do is we've got insurance companies that are forcing a discount on our optometrists and ophthalmologists that we all know are, you know, small business owners. And so these small business owners are simply being forced to give this discount, which the insurance companies are not putting any money towards that. And so we're simply just trying to end that practice. Now, if they want to come forward and they do want to offer the discount and they want to, you know, put a little something on it, that'd be fine. But what we're seeing, and the easiest example to really articulate what we're trying to do is they offer to the insured a discount on a second pair of glasses. So they may say that you're going to get 50% off your second pair of glasses. Well, that cost and that 50% comes out of somebody, and it's coming out of our small business owners here in Georgia. So we're simply just trying to end that practice, which we thought we did last year. And again, there was a little loophole found, and so we're just simply tying up that loophole.
Okay, thank you. I know there was some discussion prior to, and since this is a hearing only, that will give folks time to make any changes or settlements that they need to.
Okay.
So we appreciate your bringing that. It is a good bill. We appreciate your being here.
Thank you, and thank you for working with me on timing.
Thank you. And we have one other speaker, Anna Adams. You had signed up, and I'm sorry, if you'd like to come forward to speak to, that was for HB 295.
I think that was for Chairman Hawkins' bill. I
Yes.
was just coming to offer our support this morning. We worked on that bill, and support your bill too, though.
Thanks, I'll
We're
take
here to
it.
be supportive.
Thank you. It's
Thank
great to
you.
be supportive. Thank
Yeah.
you very much. That concludes our business for today, and we are adjourned.
Thank you.